This is a weekly chart, and you see these two red lines here. I'll just make them a bit bigger here, coming down, these two bar charts. That's 2 weeks of fall. So we had a peak up here at $4,380, and then it plunged in the space of 2 weeks down to, where are we, about there, where is it, about $3,888. So we'll call it 3,880. So that's a plunge of $500, more than 10% of the gold's price from its peak. It's recovering now. You can see there's a wick going down here, but to see that, that's a weekly chart. If I put it back to say a year-to-date chart, you can see the green line. That's the recovery here in the last few days. Now this is let's just change the timing of that chart. That's a one-day chart. So yesterday we had the green line up. It's up a little bit today, even though it's a red line. It's just slightly below yesterday's close, and it's currently at $4,019. So a little bit up from the low point. So good, call it. We've seen. I was away in China for several weeks, and gold rallied from something like $3,700 to $4,380, I think was the peak. And then on a sixpence, it turned around and crashed 5 or 6% in a day and has carried on down a little bit since, although we're having a bit of a rebound today. So we had 2 weeks, literally we had the last 2 weeks were down with kind of last few days up. So today is Friday, 31st of October, 2025. And if you don't know what day that is, it's Halloween. So be prepared for the children knocking at your door saying trick or treat. Now, I remember a few years ago when Halloween was relatively new here in Switzerland, there was an article in the local paper that the police had been called because some children had been throwing eggs at a house. I imagine it was the house of somebody who didn't open the door or something like that. I don't know what it was, but they described it as some little monsters had been seen throwing eggs at the house. And the police were called, and they found the kids concerned and confiscated the eggs. And as the story ran, that they were inviting the owners of the eggs, i.e. the mothers, to come and collect them from the local police station. There was a follow-up story to say that nobody had come to collect the eggs and they had to throw them away. But that's the story. But let's go to gold now. I'm just going to bring up the chart of gold so you can have a look at how that's doing.
Turning to the weekly chart, we see 2 consecutive weeks of steep declines, visible red bars marking the descent from that lofty high to around US 3,880 Autzers. Viewed daily, a recent uptick shows a climb of roughly US 130ers from the low. These swings may look dramatic, but in the context of a broader bull market, they often present healthy consolidation rather than a definitive top. For long-term holders especially, such declines can represent opportunity rather than alarm. The critical takeaway: volatility is part of the journey, not always its end.
This is a weekly chart, and you see these two red lines here. I'll just make them a bit bigger here, coming down, these two bar charts. That's 2 weeks of fall. So we had a peak up here at $4,380, and then it plunged in the space of 2 weeks down to, where are we, about there, where is it, about $3,888. So we'll call it 3,880. So that's a plunge of $500, more than 10% of the gold's price from its peak. It's recovering now. You can see there's a wick going down here, but to see that, that's a weekly chart. If I put it back to say a year-to-date chart, you can see the green line. That's the recovery here in the last few days. Now this is let's just change the timing of that chart. That's a one-day chart. So yesterday we had the green line up. It's up a little bit today, even though it's a red line. It's just slightly below yesterday's close, and it's currently at $4,019, so a little bit up from the low point. So good, call it $130 higher than the low point, which was 3,880. So should you sell? Should you buy? Is gold going to go sideways? Well, let's answer that question. Obviously, I don't know the answer, and what I'm telling you is not investment advice. But what I can tell you, I've seen in my career countless bull markets, and every bull market I've ever seen has been punctuated by moments like this. You have weeks and weeks of things going up, and then suddenly there's a crash. I say a crash, it wasn't really a crash. I mean, you can hardly call 6 to 10% a crash, but there's a sudden sharp dip, and everyone says, bull market's finished, it's all over. And you get some people selling on the way down. They're thinking it's going to go a lot lower. They're hoping to buy back at a lower price.
Let's address the question many are asking, should I sell? My answer, not if you're a long-term investor. Every major bull market has its corrections, sharp dips that fuel headlines proclaiming it's over. Yet invariably, the cycle resumes. If you sell now and if gold dips further towards perhaps $3,500, $3,600, you may find the rebound swift, and you may regret missing it. At the bottom of a move, the prevailing sentiment is bearish, not hopeful. If you remain invested now, you position yourself to benefit once the broader trend resumes.
And then one day you wake up and suddenly, whoosh, it's gone up again. And they say, yes, when it gets back to that low price, I'll buy. But it never does. So was this figure of 3,880 the low price? Obviously, I don't know that. And to be honest with you, I don't really think so. I could be wrong. But for gold to pull back, to do it properly, it probably has to pull back somewhere between 3,500 and where we are now. So it wouldn't surprise me to see a lower gold price. But should you sell? The answer is absolutely not. Because if you sell now, I guarantee that when the bottom is finally reached, and it'll be close to where we are now, maybe 3,500, 3,600, 3,700, when the bottom's reached, you will feel much more bearish at the bottom than you feel today. By definition, every market bottom comes at a time when people are at their maximum bearishness. Has to be the case, otherwise it wouldn't be a bottom. So if you sell now and it dips sharply, which I think is a possibility, you'll feel more bearish at the bottom, and therefore you won't have the ability to buy back. You might think, if it goes to the bottom and bounces back, I'll buy back. But when things hit a bottom, usually the bounce is fast and furious, very fast and furious, and most people I know who've done this, they've lost the urge to buy back when they could have bought 10% cheaper the day before or the week before. So if you're in it for the long term, treat it differently if you're a trader, but I'm not speaking to the traders here. If you're in it for the long term, you can hold the gold you've got, sit through it. It's your parachute. It's your umbrella. It's going to save you if everything goes wrong with the fiat system, which is a real possibility now. If we look at some of the things which are going on in the world, look at government debt. It's literally out of control. It's going up and up and up without stopping.
Behind the price moves lies a compelling macro story. Government debt globally continues to climb at an unsustainable pace. Meanwhile, central banks remain key players in the gold market. For instance, Q3 2025 net purchases reached 220 tons, up 28% from Q2. Official reserve diversification now sees gold edging ahead of U.S. Treasuries in some metrics. These structural forces provide a foundation for gold's role as a hedge, even when short-term sentiment vacillates.
What's this? Federal government current expenditures, interest payments on the debt. So the interest payments on the debt are spiraling out of control. It's not the end of the world yet, but the direction of travel isn't getting any better, and nothing's being done about it. So, it will at some point. We'll have a crisis, just as we had a crisis in the UK in 2022. Some people may remember the Liz Trust Kwarteng scandal, if you like, when they brought in a mini budget and the market didn't like it, and gilt-edged securities plunged all in one day, and they had to be saved by the Bank of England, which was guaranteed in that case by the British government that they wouldn't lose money. But you can, at any moment in time, the confidence can evaporate from the market. So you can't see that really, can you? Let me just move that, make that a bit smaller so you can see that full chart. There. Now you can see it. So you can see the government interest, that's the interest expenditure on government debt just going up and up and up. Let's just have a look at silver and see how that's doing. That also hit something like $54 and then came off very, very sharply. It went down to about $45, $50, something like that. It's now back up at $48.85. But the peak here, $54, nearly $54.50, nearly. So there is a shortage of silver in the world for industrial use. But with the rise in silver, the very, very rapid ascent in the price of silver that you see here, coming in the space of just a couple of months from $37 to $54, that sucked out a lot of silver. There's a lot of silver going through the recycling process at the moment, and that means that silver price kind of got ahead of itself, and it's coming back. So we'll probably be in a period of consolidation. I don't want to tell you it lasts for a week or a month or 3 months because we don't know.
Institutional and retail interest has returned with a vengeance. In September 2025 alone, physically backed gold ETFs recorded record monthly inflows, globally and regionally. Total assets under management for gold ETFs are reaching fresh highs, with Western investors leading the charge. This resurgence underscores gold's reemergence not merely as a safe haven, but as a strategic asset in portfolios anticipating turbulence ahead.
There's not a rule here. You can't say last time it did that and this time it'll do the same. It doesn't work like that. The market does what it wants to do. But what I can say is it's normal behavior for markets in a bull market to have periods of consolidation when a decline of 5 or 10 or 15% is possible in the middle of a bull market. And you can never know if it was the end of the bull market, but I don't think it was, because we got this government debt out of control. We've got central banks continuing to buy gold. Let's have a look here. So here we see, this is up to June. They don't have the September figures in yet, the quarter. So up to June, we saw Poland buy 89 tons, Turkey buy 27 tons, no, not 27, 77 tons, India by 72 tons, China by 44 tons, Czech Republic by 20 tons. There were a few sales. The biggest sales by the Philippines there that you see on the chart, 28 tons. So each of the first four above bought a lot more gold than the Philippines sold. And there's been net flows in Q3 into the exchange-traded funds, as you can see from that article there. So gold is seeing a revival of interest from portfolio managers because money's going into the gold physically backed ETFs. It's still very nascent. It's not a lot, but I think over time, as we get near the end of the year, gold still is one of the best performing assets in 2025. And I think as we get near to the end of the year, portfolio managers are going to have to tweak their portfolios a little bit, take advantage of the dip we're in, because we are in a dip. We're sort of nearly, not quite, but we're nearly 10% below the peak. And they can take advantage of that to put a bit of gold in the portfolio. So when the client says, did you have the best performing asset of 2025? They can at least say, yes, we have a little bit of it, even if they missed out on the bulk of the gain.
So what's the takeaway for the months ahead? If you believe in gold's role as a strategic hedge against inflation, fiat uncertainty, and geopolitical dislocations, then this moment may be one of decision. A dip of 5 to 10% in a bull market is normal. Letting fear drive you out, only to re-enter at higher prices, is a familiar regret. Conversely, remaining invested gives you the chance to ride the next leg up if it materializes. Of course, none of this is investment advice. But if you view gold as a long-term parachute rather than a short-term trade, your mindset changes. It's not about timing the top, but holding through the ride.
Now, if gold were to pull back, if they buy it now and the gold were to pull back, maybe some smart portfolio manager will pull out of gold before the end of the year, accelerating the decline. But I rather think that now we're in the last quarter of the year, it's time for them to be putting gold into the portfolio to show their clients, yes, we have a little bit of the fast-growing asset, and they want to be prepared for the next year. Because all things being equal, it looks to me, and again, not investment advice, I'm not an investment advisor here, it looks to me like gold, in my opinion, personal opinion, will be quite strong. When you've got something with a lot of momentum behind it, that usually continues. We've seen that with the tech stocks, which, by the way, are doing very, very well in the last few weeks. They've just gone from strength to strength. And we've had Jerome Powell. The Federal Reserve did reduce the interest rates a day or two ago. But what was interesting, he said there's no certainty that interest rates will be reduced again in December. So markets didn't like that for a day, and then they went off to the races again and hitting all-time highs. Let's just have a quick look and just see how those stocks are doing. I'm going to bring it up on the screen in a second. I'll start with the Dow Jones. So there you are. The Dow Jones, it's kind of, let's make it a shorter term. Let's make it 3 months, even 1 month. So the Dow Jones, a little bit below the peak, but the peak was at 48 something, just over 48, and it's now currently 47,600. So it's less than 1% from the all-time high. S&P 500, it's about 1% from the all-time high, and the Nasdaq index climbing today looks like it could go through the all-time high again in the next few days. The FTSE, by the way, did manage to break the 10,000 mark a few days ago there. When was that? It was on 29th yesterday, day before yesterday, which was the highest ever. I said it broke the 10,000 mark. It doesn't seem to have done there. So anyway, 9,000, it was an all-time peak anyway. Now let's just talk about what I said I'd tell you a little story from my career. And this is a story about how I ended up in a potential client's bedroom. Now, the story began, and it must have been perhaps 35 years ago, something like that, 30 years ago maybe, long before we had iPhones and things like that. And I don't think we didn't have the internet yet either. If it existed, certainly nobody had it.